Welcome to Netaji Subhash Open University. My friends, today we will be discussing on a very important chapter called as filing of a return under a GST law. The different types of return and its filing formalities, the due dates would be our entire course coverage of this particular session. We in our earlier several number of sessions, we have discussed the basic concept of GST. We discussed about the requirement of identification of the tax liability, how the place of supply and time of supply plays a very important role in determination of the tax liability, whether it is a SG, whether it is a CG, CG stands for CGST, or whether it is a IGST, right? A mistake, a overlapping tax which should have been IGST, right? If it is mistakenly paid as CGST and SGST, definitely that will create a problem at the time of actual assessment. And it may definitely happen because the SG portion goes to the state government, CG portion goes to the central government, and if it becomes IG, the interstate goods and services tax, it right, half of it goes through the central and then the balance half goes to the destination state, the state where the goods are ultimately going to be ultimate destination of that particular goods. So, keeping all these things, filing of return at the every tenure becomes very important. And what GST law speaks, GST law provides a number of returns for us. GSTR 1 will start with the most important one. Definitely we will be trying to cover all the areas, but the first one, the GSTR 1, it says that it represents outward supplies made during a particular month. So, its interval of this return is monthly. That means for the month of say March 2019, I repeat, the month March 2019, if the particular month, for the full month, the total number of supply that I have made, I am the supplier, right? What do you mean by supplier? Supplier means a person who is supplying goods or services, or goods and services both together. So, the total amount of bill that I have made for supply of goods or services or both together during the month of March 2019, I need to write down each and every details in a particular format, and that format needs to be validated, verified that every document is properly filled into it, right? What are the documents? There is a rules in the GST which prescribes that whenever I am issuing an invoice to my customer, that means I am supplying certain goods. Whenever I am supplying a good, say I am supplying this computer equipment to the customer, what I necessarily need to keep the documents in my mention in my invoice is that my enterprise's name, my GSTN number, because everybody has to be a GST registered one. So, if I am in West Bengal, my GST number will start with the 2-digit called as 1919, followed by the PAN number, followed by IX date or some other control numbers. So, my GST number should mention over there, my address should be there. So, my name or my organization's name, the address, GSTN number, then the date of invoice, a serial number of the invoice. Okay, these are mandatory requirement. The serial number should be serially numbered, the invoices. Then what is the goods? What goods I have sold? And then what is the HSN of that goods? What is HSN? It's a classification of that particular goods, that this goods belongs to, whether it is a chemical or it's a petrochemical, it is a iron or it is a iron and steel, it is a household item, it is a medicine. What is it? A control digit number called as HSN code. need to be mentioned, and then the weight, what is the volume of that goods, 10 kilos, 1 kilo, 100 kilos, 1 metric ton, etc. What is the unit of sale, whether 5 boxes, 10 boxes, 10 quintals, etc. What is the rate of it, what is the effective rate, then what is the value, and within the value whether there is certain amount, means what is the taxable value of it, whether the entire thing is taxable or whether there is any exempted items. Say certain items, certain medicines which government has declared as not taxable. So even that is a supply, you can mention that this portion is not taxable, balance portion is fully taxable. Then what is the rate, what is the tax rate, whether it is like 5%, whether it is 12, whether it is 18, whether it is 0, whether it is 1, and then the tax amount. And again in the tax amount, again it is very important to understand that a supplier, if it is in Kolkata and he is supplying the goods to Siliguri within the West Bengal territory, and similar to any other state, say a person is in Madurai in Tamil Nadu and supplying the goods to Chennai, which is also in Tamil Nadu, the tax should be CGST and SGST. What do you mean by CGST and SGST? It is considered as an intra-state transaction, and in an intra-state transaction, 9%, if the total tax amount is 18%, 9 will go to the central government called as CGST, and the balance 9 will go to the state government called as SGST. Which state government? The state government where from the supply starts and supply terminates, that state government. Now this entire details, all this sort of a details, including whether there was a credit note or there is a debit note for an earlier period, that means the supply which was made for an earlier period, now certain amount of rejection, return has taken place, for which a credit note has been issued. So debit notes and credit notes, etc., all are included in this particular sheet of page, digitally incorporated in an system in the GST network called as GSTR1. This form is called as, this return form is called as GSTR, that is GST return 1. It has to be uploaded necessarily by 10th of the next month. So I take an example, March 2019, enter sales, giving all the details, plotting it into that particular field, need to upload electronically in the GST portal, in the GST website by 10th of the next month, that is 10th of April, absolutely correct, 10th of April. This is GSTR 1, there is GSTR 2 and 2A. What is 2 and 2A? It is the GST law is wonderful law, one of the wonderful law creation in our country. It says, the law says that whenever I am supplying goods to you, for you it becomes a purchase, you are purchasing the goods from me. Now I am charging 100 rupees plus 18 rupees as GST, I am giving you a bill of 118 rupees, correct? Right? The moment I upload my return, what you can see at your end, that you have purchased from me. So in your GSTR 2A, 2 capital A, in that particular return, the government provides a mirror image wherein you can find it out that whatsoever you have purchased from me or so many other persons, all the amount and the tax amount is appearing over there. So you need not to go verify all your purchases, you have to keep a track that you have purchased for 100 rupees from me and 18 rupees you paid taxes to me. That is appearing as your credit in your site. It's called GSTR 2A. Once you verify the GSTR 2A that yes, everything is correct, all the purchases are properly correct, is called, you are finalizing a return and then uploading the return, confirming the return, called as GSTR 2. Right? Because GST says it is a seamless credit mechanism. You purchase goods from me, I charge tax, you take a tax credit, input tax credit. Another chapter, another session we will be discussing on input tax credit, but that's called input tax credit. So, right, you just cross check whether all input tax credits are available with you or not. So, 1 is over. 2, the deadline is 15th of the next one, that is the 15th of April. Then 1 in 1, GSTR 1, I am deciding my gross tax liability. In GSTR 2, I am discussing on my input tax credit, means how much I can reduce from my tax liabilities. 1 minus 2, that means gross liability minus my input tax credit equals to the net tax liability, that's called as GSTR 3 or 3B, now it's 3B. And you need to upload that 3B telling this is my gross liability, this is my input tax credit, this is my net liability. I have paid the money to the government account through the cash ledger. What is cash ledger? What is a credit ledger? Definitely another chapter called as books of accounts, but right now understanding I have to pay the money. So, I paid the money through banking channel, and that money, that gap amount is appearing in my ledger, right? For my ledger, it's something like my parts, right? That money is appearing in that particular ledger. Only thing is that in the return, you have to say knocking off that particular ledger, just knock off, take that money and knock off the ledger and file the return. That return is called as GSTR 3, GSTR 3B. When is the due date? 20th of the next month. So, if it is the March 2019 is the month, then 20th of the next month is the due date for filing of that return. Mandatory. These are all mandatory returns. Every month you have to mandatorily file this return, right? There are compounding taxpayers are there. Compounding taxpayers means whose turnover is less than a threshold limit. The government time to time changes the threshold limits, means very small traders or service provider who can provide a quarterly return. For them it is not a monthly return, a quarterly return, but once in 3 months, and that they file it in GSTR 4. That is 18 of the next month of the quarter. Once the quarter is over, then the next one they can file it in GSTR 4. Then GSTR 5 is non-resident taxpayers. GSTR 6, that's not important. GSTR 6 says about return for ISD. What is ISD? ISD stands for the input service distributor. And what's the input service distributor? The law says that if there is a head office who is not producing or selling anything, but that head office also, in the head office also, lot of services are availed, like auditor service, insurance service, lot of AMC, the annual maintenance contract service, etc. So, on the auditor fees or the surveyor fees, whatever payment has been made, there is also a credit. Now, the HO cannot absorb that credit because they doesn't make a bill, there is no invoice. Law says no problem. What you can always do, whatever credit is available with you, you distribute the credit to your manufacturing or supply providing units at a particular turnover based ratio, and that is called input service distribution. Input service distribution also you need to file a return. That return is called as return for ISD. 15th of the next month you have to file it. TDS has already started from 1st of October 2018. For the TDS, whenever you are making a payment, particularly the government entities, whenever they make payment, others called as the TDS, they need to deduct tax at source. And whenever TDS is made, definitely a return has to be filed every month called as TDS return in GSTR 7. And then the most important, which has already incorporated in the law, you have filed every month there is a return, there has to be an annual return. Annual return means considering all the turnover, all the input tax credit, putting together a reconciliation with your books of accounts, that how much sale you have shown, how much purchase you have shown, all put together into one, that's called as annual return, and the annual return is filed in GSTR 9. I repeat, GSTR means GST, R means return 9, and with a reconciliation, right? The total sales, total purchase that you have shown, that should reconcile with your books of accounts. That's called GSTN 9C, or reconciliation statement. It's a regular process. Every month, these are the due dates. Candidates as a student or the practitioners or professionals or industry need to keep a dashboard on that table giving these due dates and on which date which is the returns need to be filed, because if you do not file, you will be exposed to interest and penalty. Thank you, my friends, for this session.